Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. Welcome back to the show and best of the season, Rick.
Always a pleasure.
Bitcoin mania sweeping the world. And so many people are asking, is this thing real, or is this like the .com boom and bust we saw around 2000?
Well, you know, the one thing you could say for the .com boom was that there were at least companies behind it. You know, some of them obviously were hugely overvalued, but behind Bitcoin, there's really nothing. And let me say, I've got a lot of subscribers who are really gung-ho Bitcoin, and they're doing their best to educate me. And I'm going to do my best to track it, and I think that Bitcoin itself could go significantly higher in many of its iterations, Litecoin, Ethereum, whatever. So I'll track it, and I'll take it seriously, but I don't think it's going to end well. And the one, you know, question even my most knowledgeable Bitcoin guys bog down on is, well, why should it have any value at all? And as far as I can tell, the only thing that gives Bitcoin value is that the supply of it is limited. And even then, that's dubious because any company can spring up on any given day and issue its own Bitcoin-type currency.
Right now, I believe there's more than 1,300 of these ethereal currencies out there, and 4 or 5 are being created every day. It seems if you know how to do logarithms, you can have your own cyber currency.
Yeah, and there's really suppose I were to say to you, I'm going to bring wampum back, but I'm going to make sure that the shells on which wampum's value is based are relatively rare. So I'll go looking for shells that you can only find if you go out, 2 or 3 miles to sea, and you put on your deep sea diving suit or you crank up your bath escape, and you pick up a few of these shells, and you say, there's so few of these, I think we could do the entire Atlantic coast and probably only find, like 10,000 of them. So I can't see a difference really between my saying, okay, we'll distribute these wampum shells, or we'll distribute digital representations of them in blockchain form even. I'll concede that so that we can have a bigger digital supply than the actual supply of wampum. So there's really no difference. I mean, the wampum has no intrinsic value, and certain people could say, yeah, but I like the fact that they can only make so much of it. So that seems to be the biggest thing that Bitcoin has going for it, that they're only going to mint 21 million Bitcoins between now and whenever it was, the year 2040 or something. And we also know it's getting harder and harder to extract that, the Bitcoin, additional Bitcoin, which you get in the form of rewards for keeping track of all the transactions that occur. That's what the open source piece of Bitcoin is. It's a transaction that has been followed by so many Bitcoiners, miners, that you can't possibly cheat. Although we see that some of these Bitcoin operations have gotten hacked, although not in the fundamental way that suggests Bitcoin itself will be compromised. You know, these are Bitcoin wallets, Bitcoin stores, Bitcoin this or that have gotten hacked. But I would concede that the Bitcoin the code is fundamentally uncrackable. It just gets harder and harder. But one of these days, the environmentalists are going to wake up and think, if you've got 100,000 computer jockeys out there all working their computers to death to make Bitcoin, we know that they're not all going to succeed. Well, most of them will be losers, and they will have expended a great deal of power trying to be the first to, extend the blockchain in a way that gives them Bitcoin as a reward. So there's an enormous drain of power, and you can also see it on the computer end. NVIDIA, the high-end video cards are very useful to the process of creating Bitcoin. So NVIDIA itself spiked because there's almost unfillable demand for high-end NVIDIA hardware.
Yes, I've heard that in some places it's causing such a power demand it could crash the power grid.
Right. That the total power demand was equal to, I think it was the output of Denmark or something like that. It was a kind of an astounding number, or maybe it was 2 Denmarks.
Well, if it did cause a crash, could that cause the Bitcoin itself to just disappear in some kind of massive power failure?
Or in the worst case, someone like North Korea hits us with an electromagnetic pulse that totally wipes out, it fries everything that's electric. Well, I've got one guy in my chat room that says, well, as long as there's still miners up there in Alaska or in Bora Bora, then the blockchain will still be viable. It'll survive. However, he didn't address the fundamental issue that raises, which is, part of what we should like about blockchain is that we've got all of the miners coming at the chain together. So, there's confirmation and corroboration of all the blockchain data. And would you trust that to just a couple of survivors of an electromagnetic pulse war who live in Bora Bora or Juneau?
Why would they want to share it with you?
Well, because they would have a lock on the franchise. If you're one of only a couple people out there that survived the pulse and can mine Bitcoin, you certainly have an incentive to stay alive. So I'll concede that as well. But I'm not sure that the Bitcoin world would be quite as enthusiastic, as confident in Bitcoin if there were just a couple of miners out there keeping it alive.
Also, what if you do have a massive power failure that lasts for a long time? I mean, basically all of our currency is electronic. If the ATMs go down, ask the people in Houston how well it worked for them, trying to get vital supplies.
Yeah, that would be no worse for our existing money system than it would be for Bitcoin. And that's why over the years I've always advised my subscribers to keep a shoebox filled with the 1s, 5s, 10s, 20s, 50s, and 100s, because on that day when the banks don't open and there's chaos in the clearing system that essentially makes all these credit card transactions possible, when that system fails, we'll have no money. And even if you have, Krugerrands or whatever, you can't, initially you're not going to be able to go to a gas station with a Krugerrand and expect the attendant to understand it and say, oh yeah, sure, I'll give you 40 gallons of gas for that coin, whatever. So if that failure is really at the electronic level, that all the storage is wiped out, then we will not have a money system. We will be on straight barter. And that's almost unthinkable. It would be so horrible. But anyway, the risks are equal there as to Bitcoin being wiped out or our credit-based money system being wiped out.
So many people like Janet Yellen saying it's a giant bubble, the Bank of New Zealand saying the same thing. Is that a warning to people, and would people even heed a warning like that? Because once the old greed bug kicks in, they can't ignore it.
Well, I think, Yellen's statement was somewhat measured and I would say really unexceptionable. She said it just moves around too much to be a store of value. That's absolutely true. It's not legal tender, which is true. So she's making a couple really basic points, and I don't even know that she emphasized the idea of bubble. She just said Bitcoin proponents are saying, the amount of the number of transactions that are being done in Bitcoin is big. It's a big number, but it's not really. If you compare the number of transactions a day, maybe 300,000 or something in Bitcoin, to the billions of transactions that get done by Visa, you get a better sense of scale here and a proportion. So Bitcoin is really nothing. And when they take Bitcoin's value and they multiply it times the number of Bitcoin coins out there, and they come up with a figure of, I think, $250 billion or something like that, and say, see, that's even bigger than Citibank. But if you make an apples-to-apples comparison, and you compare the total Bitcoin valuation to, let's say, city assets, which are up in the $1.5 trillion neighborhood, then again, it gives you a better sense of scale.
We'll have more with Rick Ackerman right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Rick Ackerman. Rick, the U.S. Fed has upped interest rates, but interestingly enough, the Bank of England is staying the same and the European Bank is staying the same. Are they fighting a trend, or is the U.S. Fed leading the way? What's your opinion?
Well, I've always made the point that there's not room for real tightening. The Fed can get away with 25 basis points here or there, but they're not really serious about tightening. Why do they? The range right now on administered rates is 1.25 to 1.5%. So it's not as though interest rates have been raised to killer levels. All they're doing is just sort of is talking the talk and only very slightly walking the walk. So the whole idea of tightening is just a bluff, and it's not real tightening they're interested in. It's just sort of pushing rates high enough so that if they need to lower them again, they'll at least have some room to do it. We also don't have the kind of inflation that justifies tightening, and the Fed actually copped to that a few months ago. They said, okay, well, if we're not getting the inflation that we need to justify raising rates, let's just say we're raising them because we're raising them. How's that? And, I just don't see some incipient inflation right around the corner. And, at some point, that turn of the screw, another 25 basis points, is going to bring the whole shabby edifice down.
Wasn't the idea of the low interest rates to get companies to borrow money for creating new factories, new jobs, but instead we are seeing massive buybacks?
Yeah, but nobody could believe that, Ricardo Adam Smith back to basics stuff about, you bring interest rates down and companies will invest. They invest in their own shares is what they invest in, artificially pushing up the earnings multiples. So, and when you see, Apple has a surplus of $250 billion outside the U.S., right? Now, it's not just tax considerations that has caused that surplus to accumulate in its European franchises. It's really the fact that they've got nothing they would have invested it already. All those surpluses, the .com companies in particular hold, the FANG stocks, just glorified advertising agencies, what the heck would they invest in? You know, you give Warren Buffett $250 billion and he'd say, I can't use it. I don't need it. He's so busy cherry picking the real winners out there that the $250 billion is an enormity. It dwarfs the opportunities. Not maybe the long-term opportunities that none of us can really imagine or barely imagine, like, who knows, cold fusion energy or some amazing power storage solution or whatever. Those things are coming and they will get and absorb their share of capital. But right now, to be sitting on $250 billion and think, well, what do I invest in? You put it in Uber. So even the idea with the tax reform that it's going to bring all that money home, the money is home for all intents and purposes. It would come home if there was something good at home to invest in.
Is it time maybe just to give the money back to society?
Society's going to piss it away on beer. I mean, I hate to say that. I mean, the redistributionist idea, there's so much money out there. Well, yes, I mean, we could somehow jigger the tax laws so that there's an incentive for companies to transmit that money to the masses. But, they would just go on a spree at Walmart.
And wouldn't that pick up the economy and create more jobs?
No. It would be a shot in the arm, really. What we really need is long-term capital investment of a sort that doesn't, double stocks in a few years. We get good, steady growth. And, it just amazes me. I am involved in a small company in Boulder that has a technology that I think can change the world. And it was a struggle just to raise $1.5 million for that company. And when I see $60 billion valuation for Uber, I'm thinking, it's like the investment priorities are all wrong. And that's what happens when you have investment capital that's available almost at no cost. It skews the incentives, and we wind up with malinvestment at this point on an epic scale.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Ridout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, I like to say the real world now compared to cyber currencies, which aren't real. In the real sense, you can't pick one up, smell it, taste it, feel it. What about other assets right now? What do you think is going to work out? And also, I'm wondering about the new year and what we can expect, because I'm seeing some companies right now with massive layoffs. Are they expecting a huge downturn?
Well, they're not really important companies, they're like General Electric and who else did I see was laying off 10,000? Supposedly we'll all be replaced by robots within the next few years, but I don't know. I mean, it's hard to. It's just hard. It's hard to know where things are going. It looks to me like we've got to have some major shakeout to get people to put money where it's going to do the most good. But right now the focus is so, it's so short term, it's so caught up in instant gratification and double your money quickly.
I mean, I know there's new high high-tech proposals, but you were saying your high-tech thing, nobody wanted to put money into it. I know some local high-tech developments in Vancouver where I feel, from the information I've heard, that they're pretty brilliant ideas, but how do you convince people to go along with it? And again, is it this old human thing of we love new things, we hate change? That contradiction that happens all the time.
Well, I hope there's a day when we get back to the basics, really, that some of the time-honored principles of, Warren Buffett, for one, will come to bear more significantly on the markets. But for all the media attention some of these high flyers are getting, we've had just a massive skew of capital into a relative handful of companies that, as I mentioned earlier, they're just glorified ad agencies. That's what Facebook is. That's what Google is. And yes, the information that Facebook is able to develop on customers is more valuable than anything that could have been imagined by someone working at Ogilvy Mather in way back when. So we're just a little bit crazy right now, and I think the only way to bring things back to reality is unfortunately through a very painful shakeout.
So, in other words, there's going to be a market correction again, like we saw in 2000 and you can't even remember that 2009 massive layoffs, a big dump in the economy. If they're going to replace people with robots too, where are you going to have customers?
The robot thing, we've all had the experience of a frustrating checkout at Safeway or whatever, and I'm not sure these robots are doing such a great job. The automated tellers wind up being pretty good because they're, in many cases, handling real money. So we got to be real careful that they're good, smart robots that don't make mistakes. But I don't know. I'm skeptical of all the AI, the artificial intelligence hubris about where it's all going, because when I speak into the phone, the voice to text is so poor, the quality of it is so poor, that I'm thinking if they can't get this aspect of AI right, then what are we doing talking about, robots to do all kinds of very subtle tasks that, the other day in the Wall Street Journal, there's a story about how these two PhDs were realizing that to create an algorithmic, a robotic stock picker is a little bit harder than they'd imagine. That, let's say Buffett does bring that special sauce to the task that the robotics guys, at this point have found inaccessible.
Well, Rick, you have a lifetime of experience and you can't explain why you might pick a certain tech area or a certain other asset to invest in. How does a robot have that kind of experience? And as we always say, too, follow your gut feeling.
Well, it's garbage in, garbage out. The robot isn't going to be any smarter than the humans that have programmed it. And so we wind up with more hubris than we do performance at this point. I think in a fundamental way, we've reached a level of complexity where all systems are vulnerable, that we've reached so many things that should be simple are now so complex that they can't be fixed. And as a prime example, I would cite the Windows operating system. I'm into maybe day 3 or 4, 8 to 10 hours of support that has escalated to level 3. That's Microsoft's highest level of support for something really simple. I use Outlook intensively, and Outlook includes my address book. And apparently, Outlook, there's a problem. It is not indexing the data properly so that I can search and get the results that I need, all right? So they keep insisting that I'm the only one on planet Earth who is experiencing this problem, and I know that's a lie. So here is, at the really basic level, a PC sitting on my desk. with very advanced support, hours and hours and days of it, we haven't been able to get to the bottom of one problem that is very simple to explain. I mean, if I can tell you, it's not indexing data correctly. The best and brightest at Microsoft can't fix it. And I think that same complexity, particularly in the way that somewhat complex things interact with each other to produce, all of the many permutations of complexity, there's nothing that's simple anymore. You can't even buy a simple golf club. There's so much technology in a golf club that we're in danger of having a systemic breakdown, which could occur most dangerously in the banking system.
How much money do you think companies lose because they have automated receptionists? It'll tell you press this button, that button, this number. Well, and then if there's one mistake, you have to repeat the process. If you got a hold of a real person, they could tell you right then, Bob's not in right now, I can take a message.
Well, here's the deal. Unfortunately, they're not losing much because their competitors are using the same voice-driven menus. So it's not like we can switch from Comcast to some other provider and do much better. They're all bad. So they've it's sort of the reverse of a competitive situation. And in my own experience, the few companies that nobody answers the phone with a human being on a corporate end. That just doesn't happen. But at least with some companies, you can get a human in let's say 3 minutes or less. That would be my idea of a pretty good response time. So the ones that do that, the ones that connect up with things that I use, Canon printers for one, great support, Logitech, all of their products, Jabra, which makes headsets and things like that, Citrix, which is the virtual meeting room that I use. So I've gravitated to these companies, these software and hardware makers, and I always let them know in their surveys, and every company we deal with these days surveys virtually every interaction we have with them. So I'm always quick to say, one of the reasons that I've chosen you, that I'll stick with your product and even recommend it, is because you've got good support. So, that's the way we can all vote, and eventually I think it will bring more companies back into the fold. More and more of them will understand that stepping up to the plate with decent support is going to be good for them in the long run, that they're going to do more business, and even if it raises their cost of doing business, it'll be worth it.
Rick, thank you so much for chatting with us, and again, best of the season.
Always a pleasure, and happy holidays to you as well, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.